What's up, everybody? Chris over here. I'm the founder of Pollinate Trading. Welcome. We're talking prop trading today. We're talking professional trading, risk management, how you can get into a prop firm, how you can pass the challenges, more importantly, how you can thrive if you do make it in there. Okay. Got a foolproof method? Not going to say it's foolproof. It's definitely not foolproof. But there is a way to do it that will set you up for success, not just in the short term where you're doing your tryout and then magically you get funded, but over the duration of it. Now, this also works for individual traders who just don't want to trade prop, who don't want to have a firm to have to answer to. You're happy trading your own money. And, you know, it's no different. It's just understanding the little trick in here. There's a little trick, and it doesn't seem like that big of a deal. But over the course of a long period of time, it actually has a massive effect on your account, on your returns, on your ability to run your trading business. So before we get going too far into it, let me just explain what prop trading is for people who, and modern prop trading, not prop trading in the past where you would go get hired, go through the interview process and go through all that. I'm talking you put up some money to do a tryout, and you know, it's not a huge amount of money, a couple $100 up to $1,000, depending on who you work with, to do a tryout. And if you play within their rules, use their software, trade their risk parameters, and you pass the requirement, meaning you hit their profit target without going below their stop loss, they'll fund you. And right away, the biggest problem people have is relative drawdown. And I'm going to cover that. I'm going to cover how to beat that. And not in the sense of cheating, not in the sense of scheming, but it's just fully understanding what the rules are and setting yourself up to be in a position to exploit those rules, take advantage of the opportunities that are there. Now, so let me kind of explain what prop trading is, and then we'll get into the different styles, and then we'll get into how we are passing these tryouts, getting our traders funded, and getting them paid in the different prop firms. Okay, so a prop firm, in essence, is it's like a hedge fund. It's like an investment company where investors give them money, or they use their own capital to open an account at a brokerage firm, and then they give traders access to that capital to trade in exchange for a percentage of the profits, and oftentimes they're making money on commissions too. So just know that there's, you know, other stuff along the way, and every time that, so they're making money on the tryout process. You pay $100, $500, $1,000 to try out and fail and try again. That's what so many traders do. Get big excited, like, oh, there's a $500,000 account, there's a $2 million account, there's a $150,000 account, there's a $50,000 account. All you have to do is put up, you know, $300 and you get access to it if you pass it. Well, a lot of traders think that just because they've put up the money to do a prop account, that they're magically going to be successful prop traders. It doesn't work that way. If you were bad before, just because you're running prop money doesn't mean you're going to be magically good. Now, understand the incentives of a prop trading firm. A prop trading firm is incentivized to take low risk growth. So think about this. I have, I don't know, $1 million or $100,000, and I go and open a brokerage account, and I turn it into a prop account so that I can start having other traders in it. So my stop loss is $100,000 on my account if I'm running this prop trading business. Okay. So that means I can get 20 traders in there with a $5,000 stop loss. And if, you know, those 20 traders are making money, well, that account's growing, right? So there is actual money on the line there. And then the other side of that is they're making money on the tryouts. So I know this, I've talked to a number of different trading firms, and some trading firms, 4% of the people that try out actually make it. That was City Trader that told me that. I think Earn to Trade has an 86% or 14% actually pass. It's somewhere in that realm of like a 15 to 5% of traders actually succeed in tryouts. And that rhymes with, 90% of traders fail or whatever it is. Like you've heard that over time. So it's already a tough business, right? And if that's the case, and they are, if their business model isn't just to make money on tryouts, which some of them are, some of them make a lot of their money on tryouts. They're just great marketing machines. And then some of them make a lot of money on commissions and tryouts. And then the more mature ones, the ones that have been around for a while, or plan to be around a while, make their money on the profit split. Now, some firms have, let's say 65-35% profit split in, if you make 100,000, you get 65,000, the firm gets 35, 70, 75, 80, 85, 90%. It's, 50 to 90% take home for you, the trader, if you're successful. So obviously if it's a high take home, you're getting hit on commissions. And they're probably making a lot on all the tryouts. So they don't need to take a huge amount on returns, but they can, the longer they've been there. Now, these firms they need to stay in business. They've got hundreds of traders to support. So they're looking to put their money with traders who can keep risk low and continue to hit nice base hits and make a decent living. If you're trading a $50,000 account and your monthly expenses are $5,000 a month, and you're trying to grow that account and do stuff, you have to make 10% a month just to pay your bills. On a $50,000 account, that's kind of hard to do. It's hard to do on any size account, right? Hit 10% on any size account, I should say. On $1 million account, hitting 50,000 or 5,000 is a lot easier than doing it on a $50,000 account. So that's one of the benefits of prop trading, is they give you access to large amounts of capital, as long as you can prove that you can deploy it and use it correctly. So what we're going to talk about is getting the day trading, winning prop trading tryouts, and winning or completing a tryout or a challenge, and then getting funded, and then succeeding month after month, year after year, and growing that into a real business that you can, depend on. And all that comes down to you, the trader. It comes down to the work you're going to have to put in. It's not just, this looks good, I'm buying here. What really you have to do is you need to get into the proper mindset of becoming a professional trader. So a professional trader, just like any profession, they have to learn, and they have to practice, and they have to get good at things. I always say being a professional trader is the same as being a professional athlete. You have to take it with the same intensity and the same focus and the same beliefs, I guess, the same methodology that you would if you were a professional golfer, if you were a professional NBA basketball player, or any sport. You have to put in constant reps. You got to practice hours and hours and hours of practice every day. You've got to build out your game plans. You got to build out, if you're American football team, you have plays, right? So you got to work on all these plays. If you're a golfer and you're playing a certain course, you kind of have a strategy of how you're going to work that course, how you're going to work every hole. Plus, you're playing against other competitors. So how are you working against them? All that comes into play. And the same with trading. You have to do things similarly. You have to do the same, you have to have the same setups so that you know how to measure them. What a winning trade that has an edge. So you have to start there. And that's not hard. Having an edge is not hard. But figuring out if you actually have an edge and narrowing down to like one little thing is hard. Most traders are just all over the place. Oh, this guy says this, I'm going to follow him. This guy says this Chris guy has that FVBO thing he put on Twitter. That's amazing. The ICT guy, he's got this. And, there's so many people out there. And what you need to do is figure out for yourself how that works. Dial it in. So that gets down to back testing. You have to manually back test your system. And that takes time. It's really not that hard. You're talking an hour of day worth of work for about a month, and you've got 1,000 trade back test. that will put you in the top 1% of everybody in the stock market or in any market. If you do that, if you've done 1,000 manually traded back tests, you're ahead of everybody. I don't mean writing code, hiring a developer and then just putting it all in there. Don't mean that. I'm talking about you get down in front of your screen, you have a charts here and spreadsheet here, and you enter it in here, see the setup, enter your parameters over and over and over and over. You get 20 to 30 trades a day in there, and you just build that repetition. And what we're doing is we're doing two things. You're rewiring your mind to see the trade setup over and over and over. So that every time you see that setup, you're like, there it is. Okay, I know what to do here. It also gives you the confidence of seeing that. There it is. I know what to do here. And what do? You go and you go and execute. There's no, oh, I don't know about this one. Ooh, this may not be a good one. I'm only going to go in on half of my normal position, or oh, I'm not so sure the Fed announcement's coming out, and well, earnings were bad on Apple, and like all those things that don't have anything to do with your setup. So if you haven't done the reps like that, you don't have 1,000 reps in, you're not comfortable with it. So after you've done it over and over, you start seeing it and you see that it's not a setup everywhere. And then so you can just sit back and read and watch TV or just kind of relax, learn something, watch awesome YouTube videos like this one, interact in a private group of other traders until your setup is there. And once your setup starts getting in there, okay, move in, enter my parameters. This is the size of position I should have. Put on your trade. There you go. You know what your win rate is. You know what your average winner is going to be. You know what your expectancy is going to be. You know pretty much everything of what that trade is going to do. So you just put it on and let it play out. Over the course of 100 trades, you should definitely be at average to your back test. Whatever your back test is, you should be, after 100 trades, you should be about right there. And it'll fluctuate. You'll have win rate weeks where you're like 100% win rate, and the next week you're like a 20% win rate. And then you're back at 50, 60, 70% win rates. It flows. And you have to understand that not every trade is going to be a winner. And more importantly, you have to know how many trades in a row that are going to be a loser, so that you know how to size your position so that you never get into a position of blowing out of your account. Now, so that's going to get me down to the business of prop trading, how we're going to do prop trading, how we're going to open an account. Now, whether you're doing FTMO, City Traders Imperium, Lux, Maverick, Top Step, Apex, Lilo, Earn to Trade, UProfit, any of these prop firms out there, every one of them has a certain requirement. And the requirements are, this is your drawdown. And I think almost all of them have a relative drawdown. Some of them, now a relative drawdown is important because let's say you have a $100,000 account and you have a 4% drawdown, relative drawdown. If you take that to $110,000, you still have a 4% drawdown from 110. It's not 100. It's not a 4% drawdown from 100. It's a 4% drawdown from 110. Okay. So you're now looking at like 90 or 105, $106,000 that you have to stay above constantly. Right. So what does that mean? Especially if you know that your system, because you've done your 1,000 trade backtest, especially if you know your system can have 10 straight losing trades in a row, what would you need to do? If you knew that the max number of losing trades in a row was 10 and your max drawdown was, a 10 trade drawdown, what would you do to make sure that you never lost 4%? Well, what I do is I say, okay, I'm going to give a margin of error for 15 trades. Okay. So if I had 15 losing trades in a row on this $100,000 account, what would it take to hit that 4% stop out? Right. So that tells me how to size my position. So I know that if my entry is $100 and my stop is $99, that $1 is my, whatever it is. Let's say it's a 20 basis points or 0.20% risk. That's $200. So if I have a $100,000 account and I lose $1, I need to know that I need to buy $2,000 worth of that item, knowing that if it stops out, I'm going to lose $200 on that trade. And if I did that a number of times, right, 10 times in a row, that's a 2% drawdown on my account. I'm not blown up. 10 in a row is a 2%. So I'm half of the 15 margin of error that I gave myself. So 20 losing trades in a row would blow up my account. If I never messed with hitting that stop out, then I could stay in the game and I would get better every single day. And that's important. You got to stay in there, and you have to not be worried of blowing up your account because you have too much, 2 trades and you've blown up. Now, for example, I trade at Apex and I have the $300,000 account, right? So, I hear traders talk about this all the time. A lot of traders I've talked to, they said, man, I trade a $30,000, $50,000 my own account. And I'm fine trading it. When I get to this $300,000 account, I just can't handle trading that much size. I'm just not used to it. Well, the reality is that $30,000 or $50,000 trader, they're probably trading a 1E mini future contract, right? They're probably trading something fairly big. And so what happens on a $50,000 account, within a couple of trades, you're down 4%, but it's your own personal money. You don't think about it. On the $300,000 account that I trade with Apex, I'm running a 15 basis point stop position size. So I trade the micros on a $300,000 account. I trade micros, and on average position size could be about 8 micros. Occasionally I go over the 10 mark, which it would be the equivalent of 1E mini. We had one of those, I think it was yesterday, one of those today, and they're lovely because you put on a trade. Definitely last Friday we had one. It was a really big runner and we were able to size that position really well. We had a massive runner on it. So if you're able to size your positions correctly and know where you're taking your stops, you can stay in the game. So let me show you my trading setup, the way I'm doing it. And I'm going to show you just how important all of it is. And I'm going to show you how, we're doing it in the lab. So you'll see my full screen here. I have a 49-inch widescreen. I hope this is, I'm going to make this one a little bit bigger too. I'm going to size up my spreadsheet. So hopefully you guys will be able to see it a little bit better because the screen is pretty large. And I don't want to, I don't want you to not be able to see everything I got going on here. And then let me move that over just a hair. Okay. So we're going to see my live trading screen. Now, my trading situation here is I have a 49-inch screen right here. I have a 27-inch vertical right here. That's my trading station. Got my phone, got my notepad, got my notes. I got my keyboard. I got my AirPods, usually cranking through AirPods, or I've got the noise cancelers in my ears. This is my trading station. Now you can see I do have monitors over here. I've got two 34-inch HP pavilions on a PC, and they're running 4X right now in the same sort of scenario. I actually have a third, but the desk isn't wide enough. I just really haven't put in the effort. I can throw a third on there, but I don't really care. Anyway, so that's my trading setup. So it's pretty nice. You'll see if you've ever had questions on this 49-inch screens, that's what it is. So let me find just top one. There we are. Okay. All right. So what we have on the right, from right to left, I've got the S&P E-mini futures. I have a daily. Hold on. Make sure I got this. Yeah. Okay. I have a daily candle and a daily chart in the bottom right hand corner. I have an hourly. Sometimes I use a 15. I'll switch between a 60 and a 15-minute chart over here. And then I have my my execution or my not my execution, but my trading screen, the one I work from. And usually I'm running something like a 5 down to a 2-minute chart. So usually I'm stacking multiple time frames because there's a lot of edge. When I see what I want happening over here, then over here, then I start looking at where I'm going to make it happen on the lower time frame chart. And today's, I'll just go over today's live trade too, or today's trades. So that's what I have on this. Now, normally my trade screen, I have my I have 2 of these. I'll have a setup like this on the NASDAQ all the way over to the left side, and then I'll have it on this on the right side. And in the middle, I have the sometimes my mouse hits the monitor stand. In the middle, I have Ninjatrader, which is the trading platform that the Apex uses through Rhythmic. So I have a Windows server that I connect to that sits right in here. And then this spreadsheet is on the far left side. Normally that's my trade setup, but because I want to go over the importance of these things, you can see where you can have, multiple monitors to add, these little setups and whatever, however you set it up. I've traded, I prefer to trade off my laptop. I do just fine trading off my laptop, just as well as I do with this big setup here. It's just a little more luxurious. Not gonna lie. Okay, here is my spreadsheet with, I have my model here. So this is the training data that, I've done a back test on, and then I took a chunk out of it. And then this is, that would be the model. And it's also previous data too. So these are the numbers that I should be running right now. So the model had the last 75 trades of the model. The average win rate was, or average win in R. Now R is R multiples. I've talked about R multiples before. You can hit me up if you want to know more about them. So the average win is 1.79. Currently, I'm at 1.77. I'm at about half of the number of trades as, let me just, there you go. Let me just move that there. So I had one break even with 0 on the model. Average winner is 1.77. The model is 1.79. So I'm right there. My average loss is -0.82, where the average loser on the model is -0.98. This comes from me tightening up stops when I realize the trade's not working in my favor, and there's no point in waiting to get a full stop out just to have a losing trade. Now, this is where it gets a little more interesting. The win rate was 72% on that model. The new model that I'm running, and I'm only 3 weeks in, not even 3 weeks. I'm 12 trading days in. That was 47 trading days on this model. So 2 weeks ago, this was 100%. Basically, starting here, I went on a 100% trade run, going from 0 to 14.5 R in about 4 trading days. And then I went another week and lost half. And then on Friday, I think I had 2 really big trades, Thursday or Friday, something like that. And then into this week, it's just been nice. This is a little bit more common. It's a little bit more like a 70% win rate, but over time I'll fluctuate between, There will be a week where I can't do any wrong. There will be a week where I can't do any right, it seems. And then it snaps back hard in 1 or 2 trades. So this will change over time for sure. Profit factor better right now. And that's because I have a lower loss than here, which is nice. I've made 23R in the past 3 weeks, less than 3 weeks. It's almost 3 weeks. Now here's the one that the expectancy. So expectancy is a number that you should expect to over 100 trades, multiply it by that, and it'll give you that many R. So over 100 trades with the model, I should make 97 R. Currently over 100 trades, I'll make 64 R. So that's, it was when we were looking at, let's see, D10. Let's just do that simple math. 14.59 divided by 4. So the expectancy on the first week of trading was 3.6475. So, 100, so equals this times, pretty, wait, what? 31. D31. Okay, so 364 R, and let's say your R is, mine's 450 right now. $164,370 in 100 trades. Okay, so you see like how useful expectancy is right now. So if I'm at 100 trading days, so let's go 100 trading days times this times, that's 63, and so 28,746 in 100 trades. So you can see that, the first week was fantastic, but it was unrealistic. 64 to 97, I'm usually closer to the 80, 90s. There are definitely times where I'm, over one, but they ebb and flow over a period of, 100 trades, over a period of 1,000 trades. This number gets a lot more consistent. Okay, standard deviation, how much it changes, and that helps with this calculation here and right here. So you can see that my SQN, if you're an understander of the SQN, I standardized this over 100 trades. It's only got 36, so I had to push it forward. So it's not operating at its best. You can see this was 2.5 is doable. Getting into the 3s, 4s, and 5s, above 5s, that's really, really good. But right now I'm, I had a bit of a, like I said, a bit of a drawdown, as you can see over that short little period. And, but nonetheless, in 12 days, I'm up 2.75%, 12 trading days. So what would, so 15 trading days would be 3 weeks. So I'm slightly below 3%. You could call it 1% a week at that point in time. And if it scales, right? If we're talking about, I have a $300,000 account and then I keep adding money to it. I have a 320,000, 330, 340, 350. My profits continue to raise up percentage wise. Now, here's the thing that's important to note on a prop account when you're trading prop. Okay. I'm not trying to show off here by any means, and I don't think I am. I think this is actually pretty, I think people would rather if you're trying to show off or trying to, lie, I think people would be throwing up like, I'm up 85% in the last week, right? This is just conservative because look, I have to maintain, I can't size positions up too high, but in 12 days, I've made $8,000, $8,200 in profit. Okay, so there's 20 or so trading days. Average R per day is 1.92. So let's just see what my monthly. Let me try to back this into what a monthly return would look like. So if there's 20 times. So there's 20 trading days, and that's 38.32 R. Freaking solid, right? Pretty freaking solid. And let's say I'm at 15 basis points of risk, which is on $350,000 is $450 per trade. So it's about $17,247 in, let's make these smaller. So it's about $17,247 in income in about 1 month's period of time. Okay. It's 90% split. So trader split. So 15,000 take home. Okay. 15 is my profit. Now, one thing I want to note on the tryout for Apex traders, I think it's a $20,000. Let me see, because I am, in my opinion, Apex is the toughest of them all, but they give you the ability to have as many, up to 20 accounts, I think, at one time. So you can log it. My computer is far too many charts up and running, I think. Okay. Whew. All right. $300,000. Okay, your profit goal is $20,000 with a $7,500 drawdown. Okay, that's this one. So you're going to pay for the tryout fee. It's on a monthly. They charge you every month until you pass. So you're probably going to have, if I'm trading this way, it's probably going to take me 2 monthly payments at my current rate to pass the tryout. We'll call it about, so it's 17 right here. So probably this 4 weeks, probably 5 to 6 weeks of trading before I would pass the tryout. Okay. So how do I know all that? Because I have all the statistics. I've done the work. I don't have a 1,000 trade back test in front of me right now, but I have done them. If you know anything about me, that's what I do. A lot of people give me a lot of crap about me, paper trading, about manual back testing and all that sort of stuff, as, like, it's not real trading. It's not the same. It doesn't, it doesn't mean the same thing. You don't feel the same pains and all that sort of stuff. And all that's true. But as I was saying, as a professional trader, you're a professional athlete. And so you need to practice, and practice doesn't mean you're just playing the game every day. You're literally going up against the world's greatest every single day you fire up your trading account. You're going up against the Swiss National Bank, the Federal Reserve, Goldman Sachs, JP Morgan, Paul Tudor Jones. The greatest traders in the world are looking at the same screen, doing the same stuff you are. Somebody in there is. So you're going up against the equivalent of like a Tiger Woods, LeBron James, or Nadal, or whoever. You're going up against the greatest of all time anyway. So you should practice. You should definitely practice. You're going up against me. And look, I'm great. I'm really good. Just ask me. But the reason I do so good at this is because I practice, I work hard. I do I do that work. It's nothing special. There's nothing special about me. I'm no gifted trader. I didn't just wake up one day and magically, sling trades as as a trading genius. I had a desire when I was a kid and a young man to do this for a living, but I didn't actually know what it was that I was going to do, in this space. I knew I was going to trade at some sort, invest of some sort or something, but I never knew what, that I'd be sitting at a desk staring at Camelback Mountain with, a bunch of charts in front of me when I was like 14, saying, I wanted to work on Wall Street or I wanted to be a trader or something like that. I had no idea what that meant. But this is what, I had no idea what it meant. One, and two, I wasn't anything special. My mom was a computer scientist and a professor of computer science at a university. So I had the opportunity to learn, kind of have that around me, being comfortable with computers, but I'm not a huge programmer. I can code. I've coded before. I've worked, as a developer before, built my own products, but I don't use it in coding in my trading. I'm not a Rain Man sort of pattern recognition person who can see things and just instantly know the outcome. The only reason I can see a pattern and recognize is because I've seen it enough times, and I can pattern recognize, and I can the repetition. I know what's likely going to happen. You think about a basketball player like Steph Curry, right? He knows when he sees a certain lineup, a defender staying away from him a certain distance, or, when he moves left, right, and back, he knows he's going to have X space. And so he just knows that, the percentage that he's going to drop a shot in there, he knows his percentages, and he's seen those patterns over and he practices those patterns over and over and over. So he knows, okay, this is how I'm going to trade or play, right? It's the same thing with trading. Just takes a lot of practice. Takes here, let me delete that. That doesn't matter anymore. It takes a lot of practice. It takes a lot of work. Now, the final thing you'll see on this setup, and this is just my stats. This isn't my live trading. I'll show you live trading here in a second. In the trading lab, this is the trading lab right here. You're looking at it. That's the Slack group. And you'll see that I have the trades in real time that I put up here. You can see stop out filled, stopped out plus 7R. We go to the big exciting week. Where was it? So these are the trades: raise stop, 2 points, locks in 2.7R, locks in 3.44. Let's see, 3.44. Let's see, buy stop. You can see the signal there at 11 a.m. on whatever day that was. 11 a.m. There's the entry. There's the stop, raise stop, 377,450. So I lock in 0.4 R on that trade, not a full R. It got trail stopped out. So, 3.85 R on the day. It was a, nice, a nice one there. Here was another good one. Buying long at 37.55, ended up just sitting on that one all day. That was last Thursday. So after a number of down moves, that would have been right here. I think this one was, so let's June 23rd. Let's see what June 20th. All right, 23rd. Get that off the chart. That would have been the last trade here. 37.93. Let's see what that gave us. 2.3 R, it looks like. So, nice. But anyway, this is the, these are the live trades I call out. And then, I'm mostly spending my time in the general channel, just kind of chatting it up, dropping headlines, talking about, what was that headline? Hangover prevention pill. Nice. Health and wellness, just stuff, chess boxing. A lot of things in here are, we've got some day traders who are really busy scalping. And so they like to post in the trading floor away from, I try to do most of my stuff talking in here because, a lot of people are following me. So, and it's my business, my company. So, so here you go. First thing this morning, I got in opening team, no opening gap trade today. When opening gaps are there, we usually take them and it's a certain type of gap. It's not every gap is a tradable gap. I put my comments, Globex session, high volume up above yesterday's high. So we're expecting a bullish day today. Yesterday, high spike, then immediate reversal, sucked in new shorts and would have their stops above yesterday's high around 38.80. Any shorts left in the market are in a bad way right now. Okay, I said that first thing this morning. Ultimately, the last batch of shorts will have their stops at 39.50. Okay, and this could trigger a nice squeeze. And when I'm talking about that, that's over here on the far right side, that level. But 38.92.50 is where we needed to get above, which you can see we had that resistance right there first thing in the morning, and we actually used that to get long into this trend. If we got below 37.96, which is a ways lower, that would have been right in this area, I think right here. Yeah, right in here. And on my daily chart, you can see it goes, that's where things would have gotten really bearish. So going in today, we knew in the trading lab, we knew because, let me put a 15-minute. So yesterday we had FOMC minutes released. That was right here. Make this a little bigger. So this was yesterday's news. The news hit right here, I think. Rallied and then gave it up right away. Like it hit this 38.75 level, which you can see over here on the hourly was a key level that it didn't like, and it came back in. But then you go into the overnight. So this is the overnight session. And what happened? Yesterday's trading day. Yesterday's trading day basically went up and then stopped right here. So pretty much at the top of that range. Then overnight stuff happened. And what happened? We stayed up at that top of that overnight range, right? So this would have been yesterday's, Wednesday's trading high of the news. Then a little Asia session fake out where they run stops here. The stops got ran. They ran them and then they brought it up. So once these got ran, you could start looking to get long over here, but that's nighttime and I was in bed. I didn't do it. Same over here, in this area right here would have been a fine place to get long. But again, I'm not going to be in front of my screen to handle anything. So I don't take those trades. Some of you can do them and good on you. Sometimes I can get in those if I'm around and I have it, I'm okay to take those, but I don't get them all that long. Usually I'm asleep. And so at about, so this is New York time, I think. Yeah. So New York, UTC4 is New York. Yeah. So at about 8:30, this was where the news, any economic data that was going to be released and was released today, were some jobs numbers released. That got done there. If I came in and I started looking at the market right in here, okay, right in here, I started looking at stuff and I'm like, okay, well, we're staying in the upper half of the overnight range. And so that's bullish. When you're at the upper half, you're bullish. If you're below the lower half, you're more bearish. So I just kind of walk into that. But I also had context of we're above the previous day, that range right there. So bulls are in control. So this is just how I see the market. Now at the economic announcement right here, that any of these places would have been an excellent place to get long. I did not do it. As you can see, I said, we're not going to have an opening trade. So we're going to wait a little bit. And there we go on the open instantly. You can see over here at 6:31 a.m. I'm in Phoenix, Scottsdale. So at 6:30, that's 9:30 New York. And, I'm saying we hit the yesterday's high. You can see we hit yesterday's high in that first few minutes. 11 out of 11 S&P sectors were green. That's good to know. And small caps were leading. So I'm just, putting that information out there. The traders in the group understand what that means. That just goes forward. Okay, well, we have a leadership in something that had been leading on the upside recently, but was also kind of flat when there was indecision. So in small caps right now, small caps lead. That signals, okay, we're going to have an update. To me, that's how I interpret that usually. So we had a big gap at 38.90, 38.95. So that was right here. So this was our move. I'm going to make this a little bit bigger again. This was the opening move. This came back. And so I put we put an order in. Buy limit, cancel, buy stop, cancel and adjust, buy limit, 38.78.25. So I had my trade in 38.78.25. There we go. There's that. And you'll be able to see it on the 2-minute why I put it there. But that was where I put my entry. And then I had to have my stop in at over here, 38.62. So, right, 38.62 was my stop. So that was a 38.78. So it was a 16.25 point range. Okay, so down to the 2. Let's see what was going on at, after the open. So when we went over this today, now we review our morning session every morning. So after the at 11:30 a.m. 11:30 New York time, we're reviewing our session. So over here, I'm going back after the open. We're reviewing what we did on the open, just like game films, right? So if you ever played sports, I played semi-professional football, and we had to do, after our game, we had to do probably 8 hours with the whole team of breaking apart, with the head coach, breaking apart the video of the trading, every position, kind of like fixing all that. And then you would go with your team. So I was a free safety. So all the defensive backs, we would all go and do video review together on everything we did there. And so we did 8 hours of the big game, and then we would do all week long, we would do game films over and over of what we did, how to adjust, what we're doing, carry it forward into our next week's trading plan, and all that. So I believe it's important to go over the work we did in the morning. Now I went in and my stuff, I was beating myself up for not getting long here. This would have been this was why my stop was here, because this was the actual entry I should have been in. The second entry I should have been in was here before the open. I should have been in on this one, this dip here. I didn't take it. And then what I did do, or I didn't do either, and again, this is where I picked on myself a lot today. And you do this. This is what you need to do. So we had that big opening move. It took out the previous swing high, right? Yesterday's swing high. That was the swing high. We went up to it. We already had the bullish trend. We had already run stops. I had all the context in the world that I knew we were going to be bullish. So I was pretty confident in the trade. And I should have been able to buy here or anywhere in there, or at worst, I should have been able to buy. And this is a classic Chris move. I should have bought the high above that, put my buy above right here and get pulled into the trade. Now, first best position, second best, and third best entry. First, second, actually third or fourth best entry. So we're 4 separate best entries that I could have had, and I'm improving. This is how I improve. I go back over these things and I learn and I get better. Okay. But once that took off, I was like, I'm not chasing it anymore. The move it's already proven it's strong move. I need to let it come back and give me an entry. Okay. Where was that? Well, this was the most likely place was going to be a backfill down into this area. Didn't mean that it did go to that area, because you see it didn't go to that area. So why did I choose this 38.78? What did I do? 38.78.25 as opposed of, waiting to buy it down here. Well, once it started to show that it was doing it, what time was that? 6:58. Let's see where 6:58 is. 9:58. That's when I called it out. So I called it out up here. So I called it up here. I was waiting for the move down into here, and it gave me it. The best case scenario would have been buying at 38.75, but I wanted to be in a safer spot where I knew I was going to be. So we got in here and we had our stop at 62. Yeah, here was our stop, because that was the stop run earlier. So down in here was my stop. And so we get in that one and it just drifts, right? It just drifts. Eventually I I moved my stop to 38.90 up into here. And at what time was that? At 38.90, 9:56, so 12:56. So right over in here is when I put my stop in 38.90. Eventually it comes down and hits it. So, okay, I make 38.90, 38.78. So about 12 points on that one. So one micro contract, that's $5 per point, $60 or $600 for a mini. I had, I have 5 contracts. So 60 times 5 is $300 trade or so. And you can see it was as I mentioned over here, 0.74 R. So R for me is $450. So you can see I made a little less than 450. It was 3/4 of an R. So that was $300 something. And then I had a second trade, which I didn't actually get into the post here. It wasn't an official trade in the Slack, but I mentioned it. I tell people when I'm doing these things. I'm long 38.95.75, 38.85 stop. So 38.95.75 right in here. I got long again and we ran up, and then I trail stopped at 39.05, and which basically got me out over here towards the end. So we had a nice run. I gave up 10 points just in case. I was giving it some room, and that was it. So 2 decent trades, not a huge amount of money, but you can see on that second trade, it was 12 contracts. So it was a full mini and then 2 micros, and I made 1.34 R on that. So how much is that? 1.34 R on 12 contracts was $620. So I made $340 on the first one, $620. So I had like a $900 day today. And that, it's not a huge thing if that's what that is, right? 1.92 daily at $450. $862. So slightly better than average today. Just a mildly decent day. And you can see it's just been kind of drifting like that. Eventually, over the course of 100 trades, this will look different. This won't be as pronounced. It'll look a lot more like this. We'll have our little drawdowns. And that's pretty much how a trading day goes for us. Some days we get big trends up. Some days we get sideways action like we got yesterday. This stuff yesterday. And yesterday you can see we had another winning day. Let's see what yesterday ended up making money. So 7676. So it was 4 trades yesterday. Let's see. Actually, I think I lost money yesterday. -1, +82, +2. So that was 3, -1 is 2, -7.8 is 1.2 or so yesterday. So I was less yesterday, but you can see on the chart, probably, like that. Boom, boom. Not that big a deal, or maybe something like here, and then this is today or something. But this is more common. this type of move here. Just simple. This would have been multiple losers, 1, 2, 3 losers in a row, it looks like, of small proportions, and then a big, so from 14 to, so a 3R move here to get us higher, a couple of little drawbacks here, 7 to an 8R move here, 8 plus another 2, so like 10R in 2 trades, a 2R draw, 2 or 3R drawdown, and then off to the races again. So that's pretty common. And this is what prop trading looks like. You know, my account is, I've got about 800,000. Commissions are a little bit more on the micros. And I don't have commissions tied to this. So the actual number, I need to get that. I need to get commissions worked into my spreadsheet, but the actual number is lower. But that's how we're doing it. This is a clean chart. You don't, like, I don't have anything special on it. Sometimes I'll add, you know, maybe Bollinger, or mostly it's lines. I like to draw my lines so that I can remember, why was it that this was so significant? And I'll come back here and it'll look at something else. And that just helps me. It helps me do it. Now, you don't have to trade the ES. You can, you know, this works on the euro. This works on the pound. This works on dollar yen. This works on gold, silver, crude. You can do it on anything. It's just pure price action based. And all you're trying to do is just stick to the, you know, get your model to work for you. Now, the thing I like about Apex is I can buy 20 of these accounts. Okay. So I can run 20 live trading accounts, and I just need to connect a replicator, a trade replicator in Ninja. So I'll have 20 different accounts open. So what does that mean? Let me kind of go here and show you. So right now this is our spreadsheet. This is the spreadsheet. When you're part of the lab, you have access to the spreadsheet. Make it, copy it, make it your own. But what does that mean? If I'm running 20 $300,000 accounts, what's that? That's $6 million. I'm running $6 million account. So this is no longer MES. I'm probably trading ES at that point in time, because I'm, look, you know, 150 of those. It should be 15. You know, my biggest position would have been 254 on this last trade, actually. And I just moved up from 10 basis points to 15% this week. So just so you're aware. But what does that look like? Well, that's currently $164,000 profit in 3 weeks if I'm running a $1 million account. And I've ran it up to 6.16 million, so up 164. That's where we are right now. I'm at high water mark for the account, as it should be. I'm still up 2.74%. And I know that my drawdown, I can't go below $6 million and $6,010,311. And I won't, as long as I'm staying within the, you know, parameters of my trading system, as long as I don't have, let's see, I think it's 16. Yeah, it's 16 losing trades at 16.3 or 16.7. Losing trades in a row would blow my account up, and I'd have to start over. So the cool thing about having 20 of these accounts, or 10 of these accounts even, is that now, instead of having to make, you know, I'm definitely not stressed in life if I'm averaging, you know, that. So 450, let's see what this is. 450 times 20. Let's do the math real quick. 9,000 is R. So that's $9,000 per trade. So here's what my monthly income would look like on a 20 trade account. Now, let me explain. It's not really, it's going to take some work. Let me get this back to 300,000. So every time you do a tryout, we already saw it's going to take 4 to 6 weeks to pass. So you're going to pay 2 monthly fees of $657 a month. Now, right now, Apex is giving 80% discounts on this 300 or 657 a month. So you pay 657 times minus 80%. I think it's like 135 each account. So it's going to take time, get the account, apply it to your trade, your trade replicator, get it going. For me, I'm putting together a timeline of it's going to take probably a year for me to get all the accounts up and running and all the bugs worked through. In the meantime, right, I'm making, yeah, this should be 450. I'll be making about, 15 grand, whatever, 20 grand a month to figure out to get to that level. Right now, not a single penny. Well, that's not true. I'm paying $85 a month. After you pass the tryout, you pay $85 a month to be a prop trader. And that gives you all your data feeds on all the futures contracts that you trade, everything that you're allowed to trade, you get free data feeds. Unlike Top Step, which I did Top Step for a while and then I left because I found Apex. And Top Step charges you so if you want CME, CBOT, NYMEX, if you've got 3 or 4 different data providers, it's going to cost you about $400 a month. With Apex, I don't pay. I only pay 1 data fee, and that covers it. And I get Ninjatrader for free too. So another thing that's kind of cool, if you want to go a different route, we do have, I'm working on getting all the different firms and the different bennies, but you can see that $150,000 account here, your drawdown is actually 3.3%, whereas mine on the $300,000 account is 2.5%. But I'm looking to trade that in a longer time period, or I'm looking to scale up $300,000 accounts, not $150,000 accounts. Nothing wrong with it, but I want to get to where I'm trading multiple 300s. And let's say you have 1 or 2 that break, like something happens or whatever. As long as you still have the other 8, and you can rebuild those others, you can stay in this business, you can stay in this game, and it's not that hard. You just have to do the work. You got to build your back test. I'm in the middle of another back test right here, day trading, and so you can see same sort of thing. Ran the account up from 300,000 to 328 in the back test because I'm at a 20 basis risk, and I'm taking single gaps. So it's a little bit less amount of trades. But yeah, that was just today's back test practice. But and then finally our swing trades. We got long the pound today, and we got long wheat, and we have a squeeze trade on. So if you are looking to do the prop tryouts right now, I'll put the link, my affiliate link. It'll give you a 50% discount on so if you do the 300,000, you get an 80% discount just by using save 80, the coupon code. But if you use my link, the reset or the next month will be 50% discount. So the first one is 145, 135, 150 or something like that with the 80% discount. The next month, if you use my discount code, it's 50%. So it'll be 325, I think, 326. And you're going to have to pay it, and then you'll pass, and you'll be done. They'll have extracted $400 from you there, and then you'll be paying the $85. There's also an $80 reset limit. So if you do the tryout and you fail the first time, you can do a reset for $80. And look, it may take a couple of times to do it. It may take a little bit of time to do it, but understand if you're starting out, it's going to take a little bit of work. You're looking to become a professional trader. Let me turn the share off. Here we go. You're looking to become a professional trader. You're looking to get to a point to where you're earning consistent money, to where you are consistently profitable, not 100% win rate, but you're consistently making money. It's going to take time. I'm not here trying to show you the flash and, like all the cars or, the watches or any of that sort of stuff. That's not what I'm about. Sure. Yeah. I'll, every now and then I'll have some fun with some stuff. But I don't share that stuff because it's not that we're all here to make money, right? We're trading to make money. You work at a job to get paid, right? You go to law school to become a lawyer, so you have a really high paying job. You go to B school so you can get a job on Wall Street at a bank or something. You you go to computer science, or you teach yourself coding so that you can get a high paying job as a coder in Silicon Valley or whatever. Trading's no different. It takes about 15 years to become a doctor. Think about that. And then you're just going to kind of willy-nilly come in and play this game, and this one is a bigger game. Like, your upside is substantially more. There's so much more potential in being a trader than there is in a doctor or a lawyer or, an employee somewhere. You're self-employed. And, after time, you're going to be running prop accounts for firms are going to be giving you more money. If you're able to make money over time doing this, they're going to seek you out, or you can seek them out, and you can, say, hey, I'm looking for $10 million. That's, $10 million at the spreadsheet stuff. You can just figure out how much money that would be, but you can't, you have to have years. You have to have years of experience to get to the point to where you can do it. And then, of course, you got to go through the process. So do the work now, be good, document your stuff, practice. Don't get caught up in the idea of you have to read, every single journal article that's out there and every single live feed. And, you got Bloomberg over here, you got CNBC, you got Fox over here, and you've got Fox Business or whatever. And you've got, the Wall Street Journal here, and you're reading this here, and you've got chat, and, Twitter storms. And you can just dial it down to a single chart or stack multiple time frames like I do, build on it. And that'll get you into the game. That'll get you in the game of professional trading. That'll keep you in the game for the long haul. And the most important part about this, it's risk management, because risk management is the thing that'll keep you in the game, so that when you have the opportunity to have when the biggest opportunity is around, or when you have a great opportunity to have a 20R runner, and you've got, 20 contracts on a 20R run, you got to be there, right? You just got to be there the day that it happens, and it'll happen if you're consistent. But you have to realize that there's going to be 80, 140, 390 days between every time it happens and every other day that it doesn't happen. So they happen. They do. They're great. But the reality is the real money is made by the, boom, 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 10, 15, $20,000 a month, day trading, double the account. Okay. Now I'm running a $600,000 account. So now I'm not making 15, I'm making 30. Now I'm running 4 accounts. I'm making 60 grand a month. Now I'm running 10. So I'm making 300 something a month, right? 150,000 a month. You're running 20. Like, you can scale these things up like that. Of course, I'm talking very optimistically. I haven't done it myself on this product yet with Apex and with Ninja. Other accounts I've done it with in different ways. So this is a new experience. This is a new journey I'm on to do it here. Now, you can do it. The other firms like City Traders Imperium and Lux and FTMO and some of those, they have different parameters for, multiple accounts. I know City will allow you to trade 2 accounts, and they'll fund each account up to 2 million. You scale your way up to 2 million. So you're actually running a $4 million account and only have 2. If you're trading Forex, and you get to trade indices and metals with them. So it's cool and easy to do there. I love Citi. I'm a funded prop trader with Citi. I got my certificate somewhere. It's great. You don't have to day trade like this. You can, everything I'm talking about here, you can swing trade. You can do end of day trading. You can, just put on one trade a day, 2-3 times a week. You put it on a $4 million account, $2 million accounts. You put on, okay, I'm long pound sterling. I'm sorry, pound dollar or cable or sterling or whatever we're going to call it. And then, you're long 2 of them. So it hits your profit target. Cool. You just made, $24,000 or something like that. And they pay out pretty well too. I like Citi a lot. So if I wasn't focused on Apex, I would be scaling my Citi a lot more aggressively. But this is where Apex with Ninja is really where I've found my comfort level. I'm going to do that. Once I get this scaled up, I'm going to do the same thing with Citi. And I suggest you do them as well. So if you like what we saw, you can join us in the trading lab. We are absolutely focused on getting traders funded at prop firms and making money. Everything we're talking about right here does not require you to work for a prop firm, but it will definitely improve your opportunities of being successful, growing your trading account. You got a $20,000, $30,000, $50,000 account. I'm probably going to, let's call it 4% on the month. That's $2,000 on a $50,000 account. It's not huge, right? It's not going to pay the bills. But you can grow it over time, 4% month. That's doable. 4% isn't unreachable. It is absolutely doable. And we're trading the S&P 500 futures. We're not trading, we're not day trading biotech penny stocks. Like the most active futures contract in the world, we're day trading in here and we're making real money. So this can scale, right? So you can run a 10, 20, $50 million account day trading it and, not have as big of issues as you might think. So anyway, guys, I think that's it. I definitely went over here. But I just wanted to get it all out there and get this to you guys. Hit me up if you have any questions. Come join us in the trading lab. We'll get you there. DM me when you're in the lab, show up in there, just ask, say, hey, I want to do it. What do I need to do? We're going to get you there. We're going to get everybody funded. Even if you're not running prop money, even if you're running your own money, it's going to work. Okay. All right, guys. I love you all.